All right, hello viewers. So today we're going to discuss the most pressing question on everyone's mind, and that is, will the Federal Reserve raise the federal funds rate in May? And what does it really mean for mortgage rates? Also, we're going to talk about why May 10th is so important that you want to mark it on your calendars. All right, so let's just start with the recommendation. So in May, we're going to recommend a float bias, and we feel very confident about this. So our confidence score is 9, again, on a scale of 1 to 10. With 10 being the strongest. Hey, it's Todd, Pacific Residential Partners. So the latest reports indicate 80% of the experts expect that the Fed is going to deliver a 0.25% short-term federal funds rate increase at their next meeting, which is the first week of May. So the decision is going to be based on a lot of factors as they continue to evaluate the current state of the economy and concerns over inflation and all the stuff that they've been doing over the last few months. As the U.S. economy continues to recover from the pandemic, unemployment rates are definitely improving and inflation has been slow but steadily declining. So remember, when the Fed increases federal funds rates, they are increasing the short-term borrowing costs with the goal being to slow down the economy and thus slowing down inflation. So this is super important for mortgage rates because as inflation goes, mortgage rates tend to follow, and whether that's up or down. So the rate hike seems to suggest that the economy is actually getting a little bit more stable, and this outlook should continue for the rest of the year, which is good news for home buyers, especially in the long term. It's also important to note that the Fed may stay on hold for the rest of the year as inflation seems to be coming down since July of 2022, and May 10th represents a really important day as an inflection point for inflation. So what happens on May 10th is that the readings for inflation data, which is over a 12-month period, they're going to adjust. And for the previous year, there's going to be the first quarter of the year that those inflation figures drop off, which means that we're going to immediately show a significant increase or actually a decrease in the inflation reading. So I would expect to see a dramatic impact on short-term rates right around May 10th or shortly thereafter. Investors are going to be closely watching the impact on the rate hikes on various assets. So we're going to continue to see all the volatility we've seen this year. But as a result, the overall stability of the economy may mitigate any of these adverse effects. We always look forward to your comments, suggestions, ways that we can improve it. And if there's anything we can do to help, always let me know. Thanks so much. Look forward to connecting with you again in a month.